Good morning, everybody. It's Cowboy here. It is Friday, January the 9th, and it is 10:12 a.m. EST, and we have the incomparable Tom Luongo with us. Always a pleasure to have you, sir.
Thank you, Nick. It's good we finally got a chance to do just the one of these one-on-one. After we did the roundtable last week. Was it only last week we did that roundtable?
Yeah, we did it on New Year's Day.
Yeah.
It's like
That's right.
we've had a 6 months worth of weeks.
Yeah, it's the whole Lenin quote, right? There's some decades where nothing happens, and there are some weeks where decades happen.
Oh, absolutely.
I think that's pretty much operative at this point, right? So, speaking of things happening in a weekly time frame, like we're watching silver literally like move, by dimes and quarters on the 5 minute chart right now. It's pretty funny.
Yeah, we were just talking before we hit play here, and within the past few minutes, silver's just gone right back up. And first of all, Tom, your analysis is awesome. I love it. And as I said before on New Year's Day, I've been a quiet fan for years, actually paying for the weekly reports bi-weekly. You do a Wednesday and a Sunday. And just the way that you do your market analysis, the way that you look at the financial plumbing is so unique. It's awesome. So if you want to know more about what Tom's got going on, I think the best place or the easiest place to find you is over at Gold Goats and Guns, right?
Yeah, just go over to the website, Gold Goats and Guns. Well, it's the blog, and the blog is where I don't really write at the blog anymore. I mostly just post up the announcements of each of the releases, the new newsletter, and the podcast. And we do a podcast. We do a podcast, public podcast as well. It's one of those things where it punches above its weight in terms of who listens to it as opposed to how many people listen to it. I only like to do a podcast when I have the opportunity to actually talk to somebody who has some signal. And I've worked, set 8 years. We've done 240 episodes. I do if I can do 1 a week, that's on a regular basis, that's actually impressive. And then from there, you can sign up for the Patreon at Patreon/Gold Goats and Guns, where that's where the quote unquote the magic happens, right? That's where everything happens. And we do the thing. So
if you think Tom curses on here or publicly, you ought to listen to the Patreon. That's a lot of fun. It's great. I love it. You definitely let it fly, but not in a way that's offensive, though. It's a lot of fun. And before we get started, also take a look in the description. We got a nice goodie in there. I've got an algo that I've built. I got a video that shows you how I built it, how traders use Grok AI or any AI to connect it to the broker trade while they're not there. It does need to be optimized for your own trading, so it's not plug and play, but it's almost plug and play. Tom, where do you want to start today?
Nick, I would actually consider using that. I'm dead serious when I say that. I don't actually trade. I don't, because I don't trust myself to trade. I've learned over the years that I'm a terrible trader. That all that cursing, right? All that Tom Luongo thing that I do. That's a terrible set of skills for trying to be dispassionate about how capital markets are moving. Like I can't turn on my inner sociopath and go out there and just trade markets dispassionately. I can't do it. So
yeah, I just let my outer sociopath run the game. So the whole purpose of a trading algorithm is to give you signals so that you don't have to have your human thought involved. And as you know, fear and greed are the food on which the smart money feeds. So what they're going to do is they're going to play with the markets to scare you in or scare you out. And it's not real to the degree that they can do that. And so when you build an algorithm, you stick to that algorithm, you test it, you back test it over. I do 200 times if possible. Depends on your time frame, whether or not there are 200 trades in the chart you can go back and do. And then you live test it for as many trades. If it's a low time frame thing, I do at least 100 tests. You develop a probabilistic model. It's all very simple data science that you can chop up. And then once you have a probabilistic model, you can simply take the trade, take your lumps. You're going to win 62% of the time. It's one of those it's my pitch for that whole thing is like for Algo Factories, a company that V and I own together, that we teach people how to build these algos way easier than you think. And the elevator pitch is, if I could sit you in front of a slot machine and you know that you can win 52% of the time, and I gave you $1,000 and told you could bet $20 at a time, what would you do?
I do the little meme button, the whole boomers doing the thing, right?
I'm such a Gen X wannabe boomer. I always go like this with it, like, oh yeah,
yeah, but it's the little button things over it. The old woman doing this shit. That's fun.
Well, but
Um,
I'll say
yeah.
your analysis goes so much even though I'm an algorithmic trader, it
Mhm.
helps to know which way the wind is blowing because the thing about algos, you have to know when to turn them on and when to turn them off, right? So, like V the Gorilla, a lot of his information, your information, in a big way has helped me learn when to take advantage and when to avoid the markets, even with my algos. So, with that said, um, the, so much of what happens in geopolitics is readable through the markets, and I'd love to hear your opinion. Just before we started, you were talking about silver, you were talking about Japan, the bonds, and it's like I know these things, but you have it on lock in a way that it's just like it's like you're speaking a second language that you know so well. And me, I have to get out the Google and remember what's what. I'd love to hear your opinion on what's going on with that.
Sure. Well, the other thing I just to remind everybody, Nick, I was like, I do a what my quote unquote trading method. I have a way I read the markets. I don't use traditional technical analysis. I do very simple like variation on opening range theory stuff, right? And creating a probabilistic model of breaking previous highs and lows, and then just using that as your guidepost, and then look for that in reversals, trend reversals, and that's all I do. I keep it very very simple and let people and just teach people. Look, read the chart. Let your brain read candlesticks. Let them absorb 10,000 or 20,000 charts and 20,000 formations, and you will develop an instinctual understanding of what's happening in the market. And then if you once you do that, you free yourself from the from the quote unquote the trap of going, oh my God, what does this chart mean? And should I check the RSI and should I backtest this versus the 288 emerging moving the exponential moving average? And oh my God, what about what about the Bollinger Band? I'm like, no, stop that, get that out of your head. Boom, that's a 2 bar, that was a 1 bar bullish reversal signal, 1 bar engulfing bullish reversal signal. Boom, done. What does that mean? Why did that happen this week? Because it immediately gets you out of the time, that framework of perseverating and getting and what we board gamers call um, analysis paralysis, right? And a lot of people fall into that. It's a very left brain process. And because it's a very left brain process, then you didn't wind up in these logic traps and these rabbit holes. And I did this for years. And then when I was working with a guy, I just a little background story. So a lot of people don't know this because I don't talk about it very often. But after my career as a chemist ended, and I was started like, well, I got to like make some freaking money. I'm unemployed in Greenland. Well, no, really like North Florida, but like I got to do something, right? And so I put myself on, what was Elance at the time, and now Fiverr today. You can go hire a professional for $20 to go, do a bass line for your song, or give you a drum track, or write you an article or whatever. I did that. And I met a guy over in Vietnam, Canadian kid over in Vietnam, and yes, he's a kid because he's younger than I am. Who wanted to become a hedge fund manager and everything. So we fell in together. We started doing a thing. I ghostwrote his book, and he taught me the basics of that kind of style of trading. And the book that we wrote together is really the basis for how I look at capital markets, say how I use that. And that was his argument, which is that simplicity and stripping away all of the complexity is how you get to understand it. It's not necessarily conscious understanding, though. It's very much unconscious understanding. It's very much hindbrain or right brain thinking, and so you get to be able to marry those two things, and then use that as to become interdisciplinary. And that's so. Then when I got the job at Newsmax, my first stint with Newsmax in 2013, I already had that in my wheelhouse. Started then writing a gold newsletter, and just kind of now over the course of time, I'm like, gold's the most political market on the planet. So you can't trade gold technically. You've got to trade gold politically. And so over the course of the 8 years of doing gold goats, or 8.5 years now, doing gold goats and guns, and doing those market reports, and I've done over 725 of them or some ungodly shit and thing like that. Every day, every Wednesday, every Sunday, minus travel or illness, you get into a routine, and you see these same charts over and over again. And after a while, you start tying them to current events, right? And so now you can tie turns in the markets to current events. And now what I did is I literally go, I haven't looked at this market this way before. Let's do a back test, but let's not do a traditional algo or quantitative trading back test. Let's do a geopolitical back test. Let's create the theory, create the thesis or the boundary condition, and say, is there a relationship between this particular, say, bond spread and geopolitical events? Well, if your assumption is, for example, and I'll give you a perfect example of what I'm talking about. If your argument or my argument is that Christine Lagarde is doing yield curve control per her statement that she has a facility in which she does European bond market yield curve control, maintaining spreads, then you say to yourself, okay, well, that means that there should be a relationship between the German and the American 10-year spread, right? The spread between bond markets, because the market then will decide on which is the more safe haven asset in the long run. The safe haven asset of Europe, is that getting marginal inflow, or is the U.S. as the global, safe haven trade, the 10-year bond, is that getting more marginal inflow? And then you can check that with bonds, with the spread between German and American debt.
And just to interject here, because the bond market is where my brain starts to spin.
Sure.
If the yield is higher, that means inflows are like wherever the yield is a little
That
bit
means
lower,
it's selling.
inflows
It's exactly the opposite. Yields higher equals price
lower.
falling. Yeah, people are
Yeah,
selling, and
because they're lifting the
fixed.
yield to attract people in, right? Is that
Yeah, well, in effect, the bond is a fixed coupon of, say, 3%. If the bond is trading below par, then it's going to be the yield plus the price that you paid below par. It gets added back to the yield, and that's why the yield goes up.
Okay.
So, say you bought $1,000 bond for $900, yielding 3%. You only paid $900 to get a 3% coupon. That's not 3%. That's 3.1.5%, or it's like 3.15%, right? Okay.
Because
the price you actually paid, not the face value of the bond, is what matters, and the coupon is what matters. So conversely, if the thing is trading at 115 and you paid 115 for it, then you're only getting 2.7%, 2.8%, or whatever it is. And so once you make that, but what's important here is it doesn't even really matter if it matters. I'm just using the bond market this way because I actually have a very sophisticated look at the U.S. 10-year versus a variety of European 10-years. But let's just start with the basics. So if the U.S. 10-year, if the U.S. German 10-year spread, and I've now added the 2-year spread as well, so I look at both of them at the same time and how they move relative to each other. If that is a measure of safe haven sentiment, right, versus U.S. versus Europe, or political stability, that's another way of looking at it. It's political stability. What do people think of, and it's a crude measure, but that's kind of what where your head is
Yeah, 2-year for short-term stability, 10-year for long-term stability.
Right. And then you have both of those things, right? And then at the same time, that one person is doing quantitative tightening, Jerome Powell, and one person is doing yield curve control, Christine Lagarde. And if the U.S. is setting that policy in motion, where now Powell is draining the Eurodollar system through high interest rates and everything else, that's going to force Lagarde to do more yield curve control. So then you get to watch how she manipulates the U.S. German 10-year spread, and she does. And by doing that, or she manipulates really what she does, if you look at a chart of the German 10-year over the last 4 years, she manipulates the actual value of the German 10-year. She's trying to hold it in a very short range. And then movements in the U.S. bond market force her to try and bring everything back to where she wants it. And so what happens, and this is the fun part. So I did that for like 3 years. And then the last year and a half or so, I went, but I'm watching something happen in Italy. What's going on with the Italian 10 years? I'm like, this doesn't make any sense. And now I'm watching Giorgia Meloni politically move against, move in concert with Donald Trump. Since Trump was shot in Butler, Pennsylvania, and even a few months before that, I'm watching Giorgia Meloni. I'm like, she doesn't really seem like she's down with the globalists. What she seems like is that she's playing very smart Italian politics to stay alive. That was my intuition. That intuition turned out to be absolutely correct. I'm not always correct, but on this one I am. And so then I went ahead and I did the Italian German bond spread, right? And this is one what's fascinating, because if I'm right about Lagarde doing yield curve control, and I'm right about Lagarde using the German 10-year as the means by which to control the entire European bond market in terms of its price, if you can, because everything else prices off the German market. Spain, Italy, France, they all price themselves off the German market, and the rest of the world and all of Europe prices itself against the U.S. market. right? And the bond markets are what matter here, not silver and gold and everything else. This is now brass tacks. This is where the central banks have the most control, is to manipulate currencies and bond markets. Right. That's why I never wanted to be this guy. I just wanted to talk about gold and silver and make some money. Unfortunately, can't do that. So um, if you look at the Italian-German 10-year spread, it's fascinating. Go back on a daily basis and just look at the chart, and then look at every single time the spread peaks, meaning the Italian debt, because it's falling it's falling like a straight line, right? I mean, literally it's from, but every once in a while it peaks, and you get a little signal peak, like, you know what I mean? Like a little bit, it looks like noise, because it is. Because what happens is, on the day of its big geopolitical event, Lagarde is sitting on the German 10-year, which is, she's holding it down, but the entire market is selling off, so she can't control the Italian market directly. She's controlling the German market, and then the Italian market blips. But because the market is fundamentally bullish on Italian debt versus German debt, that blip goes away, and the next day, and then it keeps going down. And these blips happen over a 2 or 3 day period, and then they drop off. I can tie that literally to like 12 important geopolitical events of the last, well, now 18 months. And it's fascinating when you do it that way, when you understand it. And then I take those same geopolitical events to the US-UK 10-year spread, the Italian French 10-year spread, or the Italian French 10-year spread. I'm doing all that now as I use that model, that quote unquote algorithm, and that algorithm is a political algorithm, right? To then test all these other cross market ideas, to then see what's going on, because these are in my mind, the confirmatory signal. And again, it's my mind. You can choose to think I'm fucking crazy. I don't give a shit. But in my mind, this is, prima facie evidence of the kinds of things that I talk about all the time. I bring those receipts every Wednesday and every Sunday, and then I find it hilarious when I read the comments under any of these podcasts that I do about how Luongo doesn't know what the fuck he's talking about, and he's part of the $7,000 club, and they're like, oh really? So I'm now watching phones like yell at me that I'm an idiot when I'm actually completely over the target.
Oh, Tom, don't lie. I mean, before the show started, I saw you shave off the curly sideburns. I mean, let's get real here.
Oh, absolutely. And oh, by the way, $7,000. Silver's doubled since then, dudes. It's like 14 or 15.
And we can divert a little bit here. Silver just touched 80, is 79.96 on the Owanda, and this was in the past, like while you were talking.
Yeah, no, seriously, I was literally doing that and watching my other screen. I'm like, and silver jumped like 60 cents. Yeah. I'm watching the spot market, actually, because I tend to watch the spot market more than I watch the futures market. Simply because I refuse to pay for anybody's data. So I use investing.com, and I'm cheap, and I know that I get good data out of the spot market, and I get crappy data out of their CFT data, the CFD data. I mean, I pay them for ad-free block. I spend $60 a year on my data service. I don't know what anybody else spends. I don't have a Bloomberg terminal. I don't feed that beast. Right? I can barely even stomach going to Bloomberg anymore, or reading a Bloomberg article. I can usually figure out what Bloomberg's going to say before Bloomberg even says it. So
right. And now with these bond spread blips, have you ever considered? There's about a 2 or 3 day lag on the return to the norm on that, right? Like the return to the mean. So have you considered, whenever a news event happens, I don't play the news event, I play the volatility that occurs afterwards, whether that volatility goes in the same direction or whether it reverses back to the mean, and it almost always reverses back to the mean anyway. That said, have you ever considered developing some form of trade for that? Nah.
Dude, I don't have. People have been asking me to write a book about all the stuff that I've talked about over the last 4 years, and and I already know the title. It's the 5 basis points that change the world, and I can't, Uncle. I think it would be like Godfather J, or how the 5 basis points that change the world. Like, you know what I mean? The rule of Godfather J, and I can't do it. I just don't have the time. I don't have the attention span anymore. I would probably have to go and sit and learn how to do meditation and Tai Chi in order to get enough, get my limbic system down to a point where I can actually organize myself into that kind of thing. Oh. What I love to do is what I'm currently doing. This is the way many ways I just operate best is in a free flowing, conversation formats. Why I stopped, in many ways, it's even why I stopped writing formal blog posts and getting up on the Zero Hedge and all that stuff, because then I wound up having to write for that format, and then that became its own. That became actually too hard to do, because now I'm like, well, I can't even write a blog post anymore, because if it's going to wind up getting scraped to Zero Hedge, it better be good enough to be scraped to Zero Hedge. And so that became its own trap for like 3 years. But it was necessary to build the business. It was necessary to build the reputation, find the audience. But after a while, I'm like, this is just killing me. It's burning me out, trying to do that and the podcasts and everything else. I'm like, I can't, I was working 12, 13 hours a day. And I'm like, and that's not making the work better. The more work wasn't making the work better. What I found now is that I've gone back to the old model I had when I first started working for Newsmax, which is they were paying me well enough that I just didn't write in public, because, well, hell, they were paying me so well, I should give them all my best ideas. Right. And I said that one day to my editor, and he said, that's exactly why we pay you what we pay you. I'm like, you got it in one, Tom. I'm like, and I'm a complete babe in this. This is like 4 months into the process, right? Like, I don't know. They're teaching me how to write a financial newsletter. I don't know how to do any of that shit. I've never written like this before. So, and huge props to the crew over at Newsmax when they took a flyer on me 12 years ago. We wouldn't be having this conversation today if it wasn't for people like Jeff Yasteen. And if Jeff is actually watching this, yeah, dude, I remember. And I pay my dues, and I always give credit where credit is due. And so it's interesting. I don't have the ability to. I mean, one of these days maybe, but at this point, I'm just enjoying what I'm doing, because this is where you get the best. Because I mean, I'll do these podcasts, Nick, and something will pop into my head, and I get to do it in real time, right? You hear that in the market reports they do for the patrons all the time. It's like I'm sitting here talking about this stuff, and then the light bulb goes off, and you're like, oh, that's what that means. And then you apologize. You're like, dude, that was obvious. You should have saw that 6 months ago.
Yeah, well, that happened just when you were talking to the Brigadier General, just I think yesterday, the day before.
Yeah, Blaine Hall.
That's a great pod, by the way. And whenever we do something, Ian's on here every Thursday. He's got Thursday slot. Yeah, so I would tell you at least a few times a month, like after the fact, he'll tell me, he goes, no, I literally just thought of this during this podcast. Yeah, I live in the same area.
Yeah, Ian's that kind of thinker. It's pretty obvious. Yeah, we're talking about Ian Burlingame. Yeah,
that's right.
He's that kind of thinker. He really is.
And he and Ben Keller, and that we all live in the same area. So Ben and I have cigars, and yeah.
Oh, I see. That makes, now all of this makes more sense to me. So I'm like,
I actually met Ben Keller through basically a men's group where we empower men or whatever it is, and it's really good stuff. I met Ben that way, and then I see he's on podcasts with like you and Ian Burlingame. Like, wait a minute, what's going on here? To find out this guy lives like 20 minutes from me, so it was all very just fortuitous.
Yeah, that's all very fortuitous, right? And as I said when we were on the round table, Ben was a patron of mine for a long time, and he's like, I'm thinking about starting a podcast and getting into this financial services business, and I really like oil and all that stuff. I'm like, would you be willing to come on? I'm like, of course. That's I mean, I couldn't say yes fast enough, right? And Ben was really, I think, the first person that that became like the outgrowth, the seed, the planted seed that sprouted from into the next generation of these. And so I'm thinking to myself, like, I'm 58. I've treated myself like shit. I don't know how many years I got left. I mean, I may have 15. I might have 18. I may get bored of this and decide I want to play bad jazz drums in a dive bar somewhere, with a bunch of old fucks, and be done with it. And I don't want to do.
Are you a drummer?
What's that? I am.
I'm a drummer.
Awesome.
Yeah, I haven't drummed in a while, but I was actually my skill set was professional grade when it comes to like extreme metal. But this is quite a few years ago.
My what do you call? Well, the bump music on my podcast is a song that I wrote and recorded 15 years ago.
Okay.
And so that's me playing the drums, the bass, the keyboard, all of it. And most of that is actually multi-track bass that's been that's been,
Oh,
that was ripped through so many different filters and everything else in Reaper. It was hilarious. But and it's a very simple song. It's not particularly. But
oh, I
it's a
know
very
it
cool.
well. That's in my head. When
Yeah,
you
yeah,
mentioned
yeah.
Fiverr earlier, I thought you actually had used Fiverr for that. I didn't know it was you.
No, no, that's all me. I'm actually a bass player first. I've been a bass player since 15. Like, you do go back to the old live streams. You can find them on YouTube, and you'll see me up in my old office with my Rickenbacker 4003 up on the wall behind me, and everybody's screaming, "Dude, play the bass!" I'm like,
Oh, we got to do this.
Yeah, but I mean, I'm not I'm the kind of drummer that is, just good enough to like be bad. Oh, nice, Stingray, excellent. Is that a Sterling or is that a Ernie Ball?
This is a let me see.
Oh,
This is
sorry.
a sub series.
Okay, yeah, so it's a Sterling. Yeah, I have one. I got a basically sub 4, $350 sub 4. Actually, it's over. Hold on, I can meet one second. I'll actually pull it out.
I think
Oh,
I paid $6 for mine. No, I think no, I bought a
you got
used.
a
There's no way I paid that much.
you got a nicer one than I did. I bought the cheap one, and then I'm going to sit here and talk for a second. I get my bass out.
Yeah, no problem. Yeah, I was actually I was
for many years that I'm actually a Stingray player. I got my Rickenbacker rehabilitated, but that's mine.
Oh yeah, there it is.
Now the best part. This was the 300. This is the sub 4. The best part about this, I had the pickup and the wiring harness pulled out from the short scale. Like certainly makes the short scale, right? The short scale is a passive because I'm a passive. I'm not an active. I fucking hate active electronics. So I'm a passive bass player kind of guy, but I love the feel of this thing. So this is the short scale neodymium magnet pickup and wiring harness. So series parallel and mixed on the and with the boost thing. Yeah, I paid more money to have the pickup and the wiring harness put into this bass than the bass was worth.
Yeah, of course.
Yeah, this thing's amazing. This is the first I pulled it out since I moved to Tennessee, to be honest with you. But
yeah, I got a 2-year-old and a 3-year-old, and I let them play on the bass because it's harder to break that than my Ibanez, guitar with the Floyd Rose on it. So.
Oh well, yeah, and I'm a terrible. I mean, I'm such an average guitar player. Like, you know what I mean? I play a little bit. Mostly I do use it to write. I have really bad arthritis. I've got really bad like arthritis in my left hand, and so I don't play as much as I used to. But I mean, I can play. I'm just not going to play like I used to. So I'm not going to sit there and play moving pictures from like I did when I was a kid. Like that's how I learned how to play the bass. I don't know about anybody else. I learned how to play moving pictures. So
I would say that's a lot of my drum inspiration came from Neil Peart. So the moving pictures being the first album I ever stole was Moving Pictures. It was it's true. I gaffed it.
Yeah, well, the other thing is that for me, actually, I'll be honest with you. I mean, Neil is one of my heroes, and so is Bill Bruford, and so I know so much more about drumming because, of course, as a bass player, you need to know your drummers. So I know everything about all the drummers, and but as far as as I get older, as a bass player, my man is Tony Levin. He's my man. Like and I don't play the Stingray in honor of Tony Levin, who's famously a Stingray player. I came to the Stingray only in the last couple of years. I played the Rickenbacker forever, and I spent a long time trying to find it, trying to find something else, and I really resisted the Stingray forever. And then when I finally bought that one, I'm like, oh my god, okay, I get it,
Yeah.
And it was the same thing that Tony went through in the '70s when they first came out. He was a P-bass player. He's like, I don't want anything else. I was watching his interview with Rick Beato a couple of months ago, and then he picked up the Stingray. And
like, great channel.
Oh, what's that? Oh, Rick is amazing, right?
Yeah.
Rick's outstanding. So is Elizabeth over the charismatic voice. Like those are like I can't I can't get enough of her either. Even when she's doing music, I can't stand. But actually, as a drummer, for me, if I could pattern myself after anybody, it'd be Ian Mosley of Marillion, because he's got chops. He doesn't use them. He brings them out when he needs to, and he just serves this unbelievably evocative music. And he's so good. And
he knows the job description stays in the pocket, but then he'll let you know.
Yeah, and then every once in a while he just lets you know.
Yep.
And when he does let you know, you're like, damn.
Yeah,
I have never listened to his stuff with Steve Hackett, because I mean, the older I get, the less I'm interested in chops based prog rock. So I've never really gotten into like Dream Theater or Tool or anything like that. I did see the Beat, the King Crimson tribute band with Levin and Danny Carey. Danny Carey was amazing. He was
Yeah.
truly like the first time I'd ever really watched Danny Carey play. Because I mean, I gave the whole grunge scene a miss because I'm like, fuck grunge. It didn't work for me, at all. I was a at that point I was really just I was actually getting out of complicated music and back into simpler music. I was starting to listen to honestly, I was listening to at that point I started listening to like Leo Kottke, and I was listening to guitar players at that point, Mark Knopfler and Leo Kottke, and
Love Mark
um,
Knopfler.
yeah, of course. And
I
Leo's
actually played, I played guitar and I played lead guitar. That's where I started, was guitar. And I
okay.
didn't use I was all fingers, and I was playing like
Yeah,
Metallica and stuff. Yeah.
I play like Knopfler too because I'm a bass player and I don't know how to hold a pick. And so, and I always played like this. I arpeggiate and chord on the bass using these three fingers, just like Knopfler does in many ways.
Mhm.
So I've been doing this since I'm in college. When I had hair and it was all black. I mean, seriously, I mean, for 40 years, I've been like, I know all my chords, so, but I'm a 4-string player and all of that. So yeah, when I moved to the guitar, I just immediately said, well, I'll just play like Knopfler, and I play Telecaster. Tellies are my jam. And
I've always been Ibanez. It's just, it's a
yeah,
preference. And you can, interesting comment you made that we can relate back into sort of like finance and trading is,
mhm,
there comes a time, especially in like technical trading, but probably in the fundamental world as well, where you shed all of the complexity, because what we do is, as perfectionists, which I'm definitely one of those, is you try to get it always right, and it's just never going to happen. And
right.
so when you keep things a little more simple, like you're listening to your more simple music, you just kind of, you can vibe, flow with that, you can enjoy that. And when it comes to like trading things, it's okay. All of a sudden, when you go simple on, when you keep things a little more sensical, sure, you're going to take your lumps, but you become a lot more consistent.
Yeah, I've again, like I said, it's about marrying both sides of your brain. Like, why do I play music on a regular basis when I feel like I'm not? I say this on the market reports all the time. When I start feeling overwhelmed, I'm like, nope, time to go outside, touch grass, pet the dog, you know, get some sun, do the thing, walk away from it, you know, get some sleep, eat better, like all those little things in order to get yourself back in balance. And or and this is stuff I used to do when I was in college. I have a degree in chemistry, right? But all of my electives were in the English department taking poetry workshops. Like, what I mean? Like, I've been this way my entire life. I play board games for a way to get away, as an escape for getting away from this, to reframe geopolitics and markets in a more tactile scenario, right? Where I'm actually moving bits and pieces on the board, and all of a sudden, a game of Agricola to me starts looking like, the game board. Not that I play Agricola because I fucking hate that game, but I always bring it out because I don't know why, actually. It's probably because it's one of the acmes of that style of board game. It's a very good game. I just don't play it very well. I mean, it's too much work involved in that. But I'll just be sitting there and I'll be like, not, and when I'm playing, I'm like, these things start popping off, and they really start to ingrain a lot of the stuff of these ideas, because I'm a tactile learner. I don't learn by reading. I don't learn by listening. I don't even listen to a lot of podcasts because I can't. I'm half deaf into my left ear, so I got to listen to everything a little slower. I have to listen to podcasts at a slower pace than I talk, right? Because the only thing
Did you,
stereo in my head anymore is my own voice.
did you blow out
So
your ear because hi-hats with no ear protection? Is that what did it for you?
no, I think it's just a mixture of a lot of things over the years. I've got a variety of things, but yeah, no, it's just, I don't know. I'll be honest with you. I mean, I wear noise canceling headphones when I drum. But it's been happening for years. It's just the slow degradation, the combination of, previous ear infections, TMJ from getting your jaw racked in Taekwondo, um, you know,
Yeah,
teeth
all the above.
infections, yada yada yada, all the just life, and then boom, and then systemic inflammation in the inner ear, and tight ear canals in the first place. And yeah, at the end of the day, like this, tinnitus, this, and the fact that, what do I do for a living? Like, it's all stress, right? So, learning how to manage the stress and learning how to listen to yourself and go, dude, like, no one's asking you to sacrifice your body to be a freaking geopolitical analyst. So take care of yourself. That's my wife sitting in the back, the ghost of my wife sitting in the background, who's not here today. She's she's still down in Florida with my daughter for a couple more weeks. So I can be a bachelor, and then of course when I'm a bachelor, I like treat myself like complete ass all the time, and it's never good. So
Yeah, actually, you and my wife have something in common. You're both chemists, and she ended up being a
mhm,
microbiologist. And then she decided to leave all of that to become a chiropractor, and she decided to leave that so we could have kids.
excellent,
So
good
I
for
got a
her.
very, very smart wife, and now two very smart little children who outsmart us on the regular. Um,
Hmm.
Ian Burlingame's convinced that my son is an absolute genius. He won't let us manipulate him. So I don't know. He may want to whatever he's going to want to do. I'm gonna expose him to a lot of stuff, and maybe it'll be markets, maybe it'll be music. But I'm sitting here, I'm watching the screen while we're talking, and it just silver keeps poking up and poking up, and
Hmm.
it's like you had a let me see, a 2 bar reversal. We're on a second bar of what might be another one. And so, what were the percentages on 1 bar reversals? It's above like 60.
One bar reversal about 85% of the time they continue the trend. Some 2 bar reversals generally. This is across markets about 65% of the time. Like, and the define a 2 bar reversal is to close against the previous high or low. So if you after a downtrend, you take the last down bar in the trend, take that high. If you close within 1 or 2 bars, that's a reversal. If it's a 3 bar reversal, it's nothing. It takes 3 bars to get there. You wasted all the energy getting above that previous high. So they're a coin flip. So there's no net
Yeah.
advantage. I mean, this is generally speaking, this is stuff that goes. These are ideas that go back to to the 1960s and the 1970s. Guys like Niederhofer and whatnot who put these ideas on the table. And I just use that as a general rule. 2 bar reversal, yeah, 65% of the time, the trend will reverse and continue. For
Mhm.
how long? Hey, that's up to the particular stock or whatever. And then you can start charting probabilities for the lengths of uptrends, the lengths of downtrends. And you can do all that with simple. So again, it's all about simple manipulation and the simplest of manipulation, mostly just histogramming uh, open, high, low, and close. That's it. All you're doing is binning up these events with a simple if then statement. That's the whole trading algorithm in effect. And yeah, silver's doing this. And the interesting part about what's happening with silver this morning is we're seeing not only that, but silver's up, gold is up, and gold is at 4,500. Bitcoin is up during the New York markets for the first time in weeks. Brent is now 63.50 to close the week. That's going to be a big reversal signal out of a miserable multi-month downtrend on the weekly chart. And the dollar index is breaking above 99 because the euro is actually, it's not even the euro that's breaking down that hard today. It must be the pound. Holy shit, hold on a second. Because the
Uh,
euro,
the the JPY, the dollar against the JPY is actually done pretty well over
yeah,
the
yeah, yeah. And yeah, so the yen is breaking down today at 158.
I'm actually primarily a forex trader, by the way.
Oh, okay, cool. Yeah, no, so yeah, silver just hit 80 on the
Yeah.
on, on, on the cash chart. So silver's in backwardation because the spot market is 5 cents above the futures market right now. So we're coming
Let's
into the
just
end of the week.
some of your best podcaster with Vince. Really, really enjoyed that. He helped to clarify like backwardation, and these are all things that because I don't worry. I'm going to buy silver. Or I'm going to trade it on like the CFDs, right? Which I'm in America. Technically, I'm supposed to trade the CFDs, but you have like an international setup with the right rules, and you can. But the backwardation is such an important keynote, and this is something that people need to understand about that. So maybe if you could just explain what backwardation means to the audience, and then maybe we can
Sure.
transition to our theories around what's happening with silver, City of London, and then what I think people would benefit from also hearing. These are my three
Mm,
requests. I know it's the
sure.
patron request hour, and then what's going on with oil,
Yeah,
City
yeah.
of London, Brent, all those things. Those are all things that I think they're geopolitical in result, but they're financial in nature, right?
Yeah, it's two things. Unemployment numbers came out this morning and they're quote unquote 4.2%. And I think that's what is moving markets, but everything is moving and all of them are moving together. And that hasn't been happening for a while. So gold, silver, the dollar, oil, Bitcoin. They're all up together on the day and the end, and then we're getting a little bit of an unwind in the end carry trade. Okay, that's fine. Nothing dramatic. It's not like anything's out of range or anything like that. But we're going to wind up with weekly signals that are going to be very important. So backwardation and contango. So contango and backwardation are the way you look at futures markets. So in any futures market, you have the any market that has futures in it, meaning futures being contracts to deliver in the future said thing. I don't care if it's dollars or Brent crude or used condoms or whatever it is. Doesn't matter. If you can make a market in it, then you make a market in it. Got to give it to you loud and dirty and make it stick. It's the old patent thing.
NBA players have a really good market on that.
What's that?
NBA players have a really good market on the used condoms.
Yeah, and I mean, just wait. There's going to be a poly market with futures on used condoms, and just wait. So
the comedy is free.
Yes, comedy's not good, but it's free, folks. Now, so you have the spot market, and then you have the front month futures contract, right? And the front month futures contract. So if this is January, then front month would be February, right? Contango is that the futures market should be higher than the spot market because there's a carry cost. There's an amount of money it costs to carry the inventory of that particular commodity for that amount of time, for 30 days. So, and in gold and silver, as a general rule, and I learned this from Vince, by the way, it's about 0.5%. So if silver's trading at $80 now at $80, the contango, the natural contango should be 40 cents an ounce, meaning trading at $80, the front month contract should be trading at 80.40.
So to make it simple, like if spot were $80 in a normal situation to hold a futures contract, it would be 80.40. Is that?
Yes. That's what would be a normal contango. 80.35, 80.40, something like that, about 0.5%. Could be a little bit more, could be a little bit less. Used to be 20 cents, now it's 40 cents, right? Same thing with gold, right? $4,500, that's going to be like, the 0.5% is going to be like $22, right? Any tighter than that, and Vince goes over this in one of the recent podcasts that we did on Gold, Goats, and Guns. And I don't think it was the last one we did. I think it was the previous one, because Vince is on the podcast pretty regularly. So he's been on like 8 or 9 times, folks. I can't keep them all straight. And Vince is a house on fire and more of a fire hose of information than I am. So that backwardation is the exact opposite. That is, the spot price is above the futures price, the front month futures price. Now, what backwardation tells you in a physical commodity environment is that, especially things like oil and gold and silver and other, is that there's tightness in the current supply, and people are bidding more for silver now or gold now than they are willing to wait to pay for it in the future. When you see it systemically, like we've been seeing it for the last few months, now we start getting into whether or not the exchanges can go out and source metal through leases and or effectively what amounts to leases, their physical commodity repo contracts. I need to borrow your silver for 3 months in order to fulfill this thing at this price. I'll pay you, and then I'll pay, I'll release the lease 3 months from now. And it's in effect, it's a repo contract. And now that I think about it, I never described it that way until today. But that's basically it. So if you understand the repo market in treasuries, then you understand, silver leasing. It's the same thing. So when you see that kind of situation and it's persistent, it's because someone wants the silver now, either because someone's squeezing the nuts of the shorts, or there's just a freaking run, and the exchange has been caught short, having written more paper than they have physical to deliver or whatever. And so that's what's going on. And when you see that happen, you will continue to see the spot price. If it's really bad, the spot price will continue to outpace the front month the futures price, because the exchange is dying. That's quoting the price, can't afford to raise their bid to the current price because they're trapped. And if they print that number, then then all of their traders go broke and all of their counterparties go broke, because they're all short at $70 and now it's 90. Oh fuck, now what? And they're on the hook for 40 million ounces, and they're going to lose $20 an ounce. All of a sudden they're staring at an $800 million bill. Okay.
And so
Or
for
$10 billion.
the listener, like, to keep it again, I like to
Yeah.
so for people who aren't familiar with this type of situation, like the COMEX is where you can give $10,000, whatever the number is to the COMEX, and you can trade positions that $10,000 will buy you, and you can settle in physical silver. If you were to make, let's just say $5,000, you can settle where they will send you $5,000 in silver, less fees, such and such. Well, if the COMEX is allowing you to trade contracts, but they don't have the silver to cover it, then that's a very big problem because
Yes.
they're going to have to settle in cash and everybody's going to know they don't have the silver to back up their trades. So when you see backwardation, it means that people don't trust the exchanges and they want their physical metals and they want it now for two reasons. One, they don't want to trust the exchanges. Two, that scarcity of silver, such that the COMEX and other exchanges may or may not have it, means that silver's probably going to go up in price anyway. So they want to make sure they have physical silver in that case. So
Right.
that's the idea. There is
They're betting that silver's going to keep going, and then there's the other, and then embedded in that is who is losing trust in the exchange. That's where it gets really. That's where you pick up the hindbrain, ask yourself the question: okay, who would be doing this? Why would they be doing this? Is it just a one bank squeezing the nuts of another bank? Maybe. Many times in the past, it has been. JP Morgan will, big swinging dick will go and take out somebody else over some smaller player and run the price up and run the price down and make a mint in the process. Happened before, happened for most of our lives. We've been watching it happen, and that should be, and that sadly is everybody's default position. Don't think that that's the case anymore because we no longer have one market, or we no longer have two markets, London and New York, and Wall Street, running a triangle trade using all of these. When I talk about leasing silver, well, how about leasing your SLB shares, which don't settle in physical silver at all? They're paper.
mm-hmm.
But you use them in London as collateral to buy a futures contract on the LBMA, and they use that long to go to the COMEX and say, well, I've got this LBMA contract, and they use that, and then you go and then you run the triangle trade, and they keep rehypothecating the same ounce of silver in the circle jerk all the way up the chain, and that's how we get into these scenarios where we have 400 ounces of paper silver for every physical ounce of silver represented on either the COMEX or the LBMA or both for 2 generations, for most of our lives, certainly for your life and most of my life. That's been operative. That was the market, right? And so those guys were in control of the market, and then the control of the physical supply of gold and silver was mostly regulated by who? The Canadian banks. This is why I will scream all roads lead to London, because now you have to understand that the primary mechanism by which gold and silver mines are financed for years up until the mid 2000s, and we can thank, and moment of silence for the great Jim Sinclair for explaining all this to us 20 years ago, because none of us understood it. Okay, and Jim went out and broke ranks and did it while Martin Armstrong was rotting in jail. Okay, this was all the same stuff here. This is that story. But they get that through non-recourse loans through the banks, where the bank gives the exploration company the money, to develop the project, do the exploration and all of that, and the bank immediately then takes a immediately takes a short in silver market to offset their long, like, you know what I mean? Like that's the way this worked, and so and then they would use the same banks were then trading the silver to maintain their position, and then using that to destroy the and do a laundering operation on the price of silver in order to bankrupt the very people that they gave the loan to, so that the loan would go bad, they would run out of money, extend and pretend the market at these terrible prices. These poor guys are getting fucked, and then eventually the loan gets sold, and then the company has to dilute, do 3, 4, 5 rounds of capital raises. They dilute the freaking company out, and by the time the mine actually gets into production, they can't make any money. And all they're doing is spending the entire time they're running the mine paying back all the loans to the banks, who are still running the friggin' paper short game against them to ensure that they make no money. Who's winning there? Who's doing that? Canada is a proxy not for the United States. Canada is a crown corporation. It's a crown. It's owned. Canada is owned by the fucking King of England. Period. Get over it, folks. That's the truth. Canada was set up after the Revolutionary War to be the Pakistan to America's India, to bring it in a modern context.
And those sausage
Canada is a hostile nation and always has been to American financial and to American financial independence, because it's such a massive resource, wealth generating, a natural resource cornucopia, that it can then compete directly with American commodity production and industry. So, and then, the financial markets, the plumbing and the infrastructure, all of that is all still over in London. I mean, I'm sorry, but like, the city of London generates 1/3 of British friggin' GDP. When I look them, Britain is a third world country. They're not the fourth or fifth largest economy in the world. Like, literally, they make insurance contracts and commodity futures contracts, and they move money around. Like, the British, 30% of the British pound, the British pound, settles like 30% of the world's forex trade still. Okay, like, it's the intermediate currency,
which is the biggest market in the world, by the way. Forex settles something like $7 trillion a day.
Right, which is only the biggest market in the world next to the U.S. Treasury market. Right, so do the math. Anything that would threaten the pound's ability to be that market maker. They think of they're the market maker in the forex markets. They're the Thomas Cooks, and they're the all of that. So anything that threatens that has to be destroyed, or extended and pretended, or have regulatory capture and controls around it, such that we can't allow that. Why do you think they're fighting the Genius and Clarity Acts in the United States so hard? Why do you think they're fighting them? Because the stablecoin infrastructure, regardless of what you think of where it's going or anything else, all of that, if the Genius and Clarity Acts were going to reinforce London's control over the currency markets in the future, they would have already passed. They would have already gone through both the Senate and the House and all of that. They would not be. They would have created crypto regulation in the United States to support their shadow control over the global financial markets. These acts are a direct threat to it, because their minions in Congress, 52 of whom just voted for a war powers resolution against Donald Trump over Venezuela. That tells you exactly how many traitors we have in the Senate here in the United States. Again, now I start doing the free association thing. Now I start doing the cross-market analysis. Now I start bringing in all the geopolitics. That's where this really lies. If the Genius and Clarity Acts were reinforcement, were concrete or the rebar to reinforce London's concrete control over global forex trading, they would have already passed. They would have already been in process, and the fucking BIS would be running the world, and we'd already be in CBDC hell and all the rest of it. Wrong. And that's why anybody out there still screaming that this whole stablecoin thing is going to be turned into, Davos's digital friggin' gulag doesn't get it, because you're not reading the fucking room, folks. Like, they're actually trying to build a layer on top of, build that real second and third layer of Exeter's pyramid in the crypto space on top of the hard collateral that is Bitcoin and the proof of work coins. And any of them there to survive. And apparently Zcash is just like left the fucking room, because the whole board just the whole governing board Zcash just like, and I couldn't see that fucking coming.
Right? So are you telling me, Tom, that the $20,000 I invested in cockroach farms was a bad move?
Yes.
Okay. All right. Yeah, I was ready to start selling the chitin to the kids,
Yeah, there's not. I don't think there's going to be a futures market in Davosian copper.
Okay.
The Davosian chitin. No, I just don't think that. Yeah, no. I mean, that being said, they're going to kill all of our pets, because that shit's all in our pet food already. Be very careful. Be very careful. Go look very carefully Like, about this. Honestly, folks, put your dogs and your cats on a raw diet and just be done with it. Like quarters are still friggin' 220 a pound, for Christ's sake. Just do that, and some turkey necks, and some you know just and some raw bones that you can get from the fucking local butcher. Like, seriously, like, that's get off of kibble, get off of all of it. Trust me, your dogs will live forever, and none of them will get cancer. And then you also kill the bug industry in its crib, and you fortify the local meat processors, most of whom have been going out of business. So we have a lot of work to do to rebuild society. But thankfully, we just got some new great rules about meat processing for small farmers from Kennedy. Now we got to start working on local dairy and freeing the local dairy industries. That's going to be hard because the pastiche of state law on food safety regulations is fucking insane.
Yeah, we
You ran a goat farm for 10 fucking years, folks. Yeah. So
I was gonna say, yeah, you would have had to see. We're out here in Idaho, and I source my beef from. They're about 2 hours away, but they deliver up in the area. It's a
sure.
husband and wife team, and the husband actually is a soils expert, has a degree, and he grows the feed for the beef that they raise. And then the beef they have had for like the line, the generational line, all the heifers and the calves, they've had those
Mhm.
for generations now. So
Awesome.
we used to buy it from a guy who would go to an auction, buy the calf at 6 months old. He didn't really know much about the calf. Yeah, he'd feed it antibiotics. Like that was our first. We were new out here. We didn't know anybody.
Sure.
But I did the research and lucked out, and I found these guys. So and they also we found some. They're Mennonites, and they have the cleanest chicken around. It's hard to find clean chicken, man.
Yeah, it really is. I where I am up in central Tennessee now. Yeah, we're right around the corner from a Mennonite community as well. So yeah, we're really looking forward to getting you know my wife and I and my wife and our neighbor who we moved in. Honestly, we moved next door to her family. They've been up here long enough that they've already scoped a lot of this stuff out. So yeah, we're the only reason we haven't done anything yet is because I don't have the infrastructure for a freezer. When I get off this podcast, my electrician is showing up, who's a patron of mine, by the way. He lives like a couple hours away. I'm going to have him doing my electrical work. I already had him do the RV hookup, and I'll have him do the rest of the hookup for the basically the shop that we have built around the RV. And then
we can. I don't know how much time you have.
I may force my GC to make him the electrician sub on my house too, because why not? Like, what goes around comes around in this life, folks. He's a good guy, so he does good work. So and I'm the boss because it's my house, so the GC gets to use the subs I tell him to use.
Nice.
That's the way it works.
It's true. You are paying the paycheck on that one. And as we move, I know that I don't know how much time you have, Tom, but we were an hour in, but we could go quite a bit longer if you care to.
Once I see a car drive up the driveway, then I'm about 5 minutes after that, I'm gonna go, hey Nick, I think it's about time to go.
But okay. Well, before we move back into the like the silver sort of trade thing, I have a funny Mennonite story for you. So we would drive out. Now it's a long story now. They deliver closer to us, but before they delivered, we would drive out about 35, 40 minutes to another city where there's a fruit stand where they do all their work and we buy their stuff. And
right.
I'm over here looking at, I don't know, onions or something. And the Mennonite girl I'm talking to her, just had a question. And then so I said, okay, thank you. I'll walk over to the register. She walks out the other direction. And then I look in the register and she's right there. The same girl who walked to the parking lot in the other direction is magically appearing. And I look at her. I said, weren't you just over there? She said, that's my twin sister. Oh, Jesus Christ. Yeah, I got
and I teleport. This is new to me.
So I thought I was losing my mind. So the silver move, you've talked about it, and you have a theory and a strategy of basically draining City of London, or at least taking the silver trade out from under their control, and then copper is happening, and maybe oil is next, and Brent crude seems to be just a massive drain on resources. So I figured before the car shows up and he had to go, maybe we could, go over in that direction.
Yeah. Oh, by the way, somebody is really fighting. I've been watching. You look at the volatility and the Dow futures this morning. Something is fucking happening, dude. Like someone is freaking out. trying to hold the Dow back. I just happened to notice I was clicking
Oh,
back over.
wow, look at this. Yeah, I'm gonna
Yeah,
throw up a chart here if I can.
yeah, yeah. I'll do so. This is
Share
fucking wild.
screen. There, that's it here. Might be a
But
little
yeah,
less.
as you do that, so again, like I was saying, yeah, look at that.
That's that. Well, let me open it. That's on the 5-minute chart, guys. So this is
Yeah,
going back to the market open. Like, so this is like normal Dow,
yeah,
more or
right.
less, and then this earthquake happening, this Richter scale, it's off the charts.
And that's over the unemployment data, most likely. Someone's fighting that like you wouldn't believe.
Did you see the Canadian employment numbers too? They came out at the same time.
No, I didn't see them.
Oh, they're like
What
orders of magnitude off. It's
yeah,
it was supposed to be like let me look over here. So the employment change in Canada was supposed to be, they were supposed to lose 1,800 jobs,
right.
and they
And then,
gained 8,200 jobs.
yeah,
Oh,
yeah, but
okay.
the unemployment rate went up. So do I believe any of those numbers? No.
No.
And non-farm payroll, that's our yeah, that's yeah, our non-farm payroll numbers were good. The unemployment rate was good. Building permits are up a little bit. Housing starts are down. That's actually good. Yeah, I mean, it's all good to me. So, but the theory is really quite simple. And again, Vince and I have done hours of this, so we're not going to be able to go over it in great detail here. But I'll just give you the TLDR. All of the backwardation and contango stuff that we're seeing in between London and New York, it's even worse when you start factoring Shanghai in, and then you start getting into arbitrages that won't close. Where you've seen all this stuff like, oh, they're paying $130 an ounce for silver in Japan or this. Well, let's talk about Shanghai, okay, where Shanghai has been durably. We first saw this happening in gold a couple of years ago, and we like sort of like a $40 gap between Shanghai and London, where London was and New York was like $30-$40 less than Shanghai. And if it happens on a daily basis for a day or two, it's not a big deal. That means that somebody does some large order, somebody stood for delivery over in China, and over here, someone's trying to feed that, and it should go away very quickly. The arbitrage should close if it's just one guy. If it doesn't close, if you see an arbitrage, this is a general market commentary. Okay, so I learned this talking point from this example on that podcast I did with Vince, and I just added it into all of my market structure thinking. Say, when you see an arbitrage that refuses to close, say that $40 between Shanghai and New York, and it persists for a week, 2 weeks, 3 weeks, 4 weeks, that's a structural shift in the market where New York can't deliver and all of the gold is going to China. Okay. It's a little bit more complicated than that, what's going on right now. Vince and I, having looked at the flows of silver and gold and whatnot, it's pretty obvious that between China and the United States, they're taking turns squeezing London's nuts. Okay. So for a couple of months, it'll be China's turn, and then China will hand it back to the United States. And they're usually timed with trade negotiations, or some other geopolitical stuff going on between the United States and China, and they kind of hand off one versus the other. For example, what I mean is the U.S. and Chinese may not agree on much, but they agree on squeezing London out of the fucking gold and silver market and the copper market. Why? Because London, being the 18th and 19th century industrial powerhouse, it made sense for them to be the forex and commodity price setters, because they were the ones using it all. They're not the industrial powerhouse anymore. The United States and China are. So why does London get the exorbitant privilege of setting the pricing, having the pricing mechanism for all of the world's most important industrial inputs?
Well, I
Why the
imagine they've
fuck?
been
It
using that privilege to
makes no
hold on to
sense.
that privilege, right?
Of course, they're going to fight tooth and nail for it. That's exactly everything the British do. That's what MI6 is designed to do from the ground up. Okay, that's where the color revolutions really come from. That's why Russiagate went through MI6. That's why Bill Browder and Edmund Saffer and all those fuckers were in there raping Russia in the 90s, putting Martin Armstrong in jail. Why Putin jailed Khodorkovsky and nationalized Yukos. All of these events that we all talk about that we've all talked about, and you've all heard us talk about. I don't care if you're talking to we've all talked about it. You watch the Duran, they talk about it. You watch all of that stuff. That whole pastiche of history is all about London trying to can maintain control financially over the 800-pound gorilla running around the world like Rambo without a jockstrap, enforcing their will militarily. Okay. Now, that's actually a direct quote from A Fish Called Wanda.
Oh, I did never see that.
That's one of those. Yeah, Rambo without a jockstrap. Yeah, I think that's from Fish Called Wanda. I can't remember where the hell I got that one. But yeah, we've been. But yeah, that's the problem, right? And that's what we're. And now under Donald Trump, we're clearly saying that we're done with this. And I know there's a whole group of people out there who just want to believe it's the Jews, and I'm like, it's so much bigger than that, folks. This goes back to Rome, as Ian Burlingame talks about. This goes back to all of these people. Being a shitbag is not an ethnicity, okay? Like, it's not. It's just part of human nature, and there are shitbags in every culture. There are Russian shitbags, there are American shitbags, there are British shitbags, there are Jewish shitbags. Like, they're everywhere.
Yeah, there's just no Italian shitbags. The Italians have
no. No, there's plenty of them too. Like, oh my God. Goombas, come on. I don't use those for, when I start using like terms like Goomba and Guinea, like that's when that's when I don't, those are Italians I don't like. Like you call me a WAP, I just freaking laugh. Like, I just think that's hilarious. Like, because WAP stands for without papers, by the way.
Nobody says Dago anymore, though.
Yeah, Dago's hilarious. Like, yeah, it's funny. I know. I don't know. Like, it's just funny because the Irish are, it's a New York spur. I don't know. So but that's the main story, and that's what this silver and gold thing is so. It's why it's so important, because it's now been going on for over a year, starting with gold. Bessent ran an operation on gold. He weakened the dollar and bought gold and pulled it off the COMEX. Now, did the United States pull it off the COMEX? No, JP Morgan pulled it off the COMEX and stuck it in the GLD vault, right? Or wherever the gold went. And it went to a lot of different places. Then silver, and then silver started to get a bid once gold got really expensive. Interestingly enough, the dollar stopped depreciating literally to the day that Ursula von der Leyen went to Trump's castle in Scotland, along with Keir Starmer, and cut that trade deal. Like, to the day. Go look at the chart. Go look at a weekly chart. You'll see the dollar index just last weekend of July, that week, stopped. And now the dollar is starting to break out again. And so
that was the last week of July, you say?
Yeah, last week of July. It was July 28th.
And then what was that's an important day in my family.
If I'm correct, I'm almost sure I'm correct about this.
No, what was the
analysis the other day? I'm hoping that I'm not fucking up my ass now and getting myself confused with some other market that did the same thing. But really, honestly, so many things changed on the week of July 28th when the European Union capitulated and cut a trade deal. And so this dollar stopped, for the most part, the dollar stopped depreciating, and then the yen started to depreciate.
Yeah. Yeah, that was that would that wreaked havoc on markets too.
Yeah, it did. So what happened is, that's how you know that, like I told you, like China and the US are playing games in the silver market. You take all the silver for a couple of months. No, you take all the silver for a couple of months. Well, the United States and Japan are running a currency operation too on the European Union, same way. Because if you look at the Euro JPY cross, you'll see exactly what I'm talking about. The US dollar, the euro yen, the euro dollar, depreciates from the dollar perspective up to about $1.16, $1.17, or $1.18, whatever, and then trades in a very.
I think we lost Tom there. He'll probably be back. I know Tom said he had some issues with weather, so maybe that his internet kind of flipped out for a second. I want to take a look at what he's talking about here, though, until Tom's able to come back. I'll fire off a text to him. Give me just a second. Where's Tom? I think we lost you. Maybe down for you. All right, let's see if he's able to come back in. Now, he is talking about the EU-RUSD trade. And we'll give this a couple minutes to see if we can get Tom back. But if you look at the weekly chart, which is a very high time frame, he's actually there. He is, okay, or not there he is, but there he went. So he must have seen my texts. Let me go ahead and do this here. Well, and either that or he was talking about something that was like way too important and silence him. We'll see. We'll see what happens with that. We'll give it a minute and we'll run over this. And then if we gotta go, we gotta go. So let's see. Yeah, the electrician cut the power, right? It's quite possible. Let's see here. Let me see if we can pull this chart up real quick. And we'll turn that off. So there it is right there. Bring this to the whole screen. And I'll widen this out. But you can see where the euro actually went up like this from what he was talking about. And this is going back to the beginning of the year. Everything did in July, what he was talking about there towards the end of July, which was right there. It was right at the end of July. Or it was the end of June, really. But the dollar really started to take off that last week of July. July 29th is what this is saying. So it's right when he said, so yeah, Tom's memory appears to be correct. And then you have right here, the dollar starts to actually appreciate again in September here. And then the euro just all of a sudden takes over at the beginning of the year. Okay, Tom says he lost power. Yeah. We can continue on the next pod. Thanks, man. All right, so yeah, Tom's lost power, so he's done for today, I think. But yeah, so you can see that the euro heads up here, and then it trades in this range. That's the last thing he said before he lost power. So what I can tell you as far as the effect of that is that it becomes very difficult for Europe to export at that point. Right. And this is the euro versus the dollar. So high currency means it's hard to export. And the US can export a lot more easily to a country when our currency is low compared to everybody else. And the dollar index itself, he was also mentioning, if you look at this, this is a high time frame chart. It's got all my marks on it. So I'll try to make this simple as we end of the show here. From January 2025, our currency has gone down against a basket of major currencies by about 15%, roughly, a little bit less than that, probably like 13-14%. And this is mostly against the euro, but it also includes like the yen and the Swiss francs and all that. And now the dollar, I've got it projected to head up at some point here. You got all these different ideas of what would happen, and it will go sideways until it goes up. That's the most likely thing I see happening. But there is talk of a devaluation coming, and I think we'll wait until our next podcast to talk with Tom about that. So look him up, Gold, Goats, and Guns. Awesome podcast. Now, look, remember, not everybody is right about everything. And I know a lot of people in the audience are concerned that, Tom thinks this is going to happen and that's going to happen, and he's wrong. Maybe he's wrong, maybe he's right. But I could tell you that a lot of the stuff on markets and everything else, he's calling it out in ways that I can, that are extremely defensible, right? Meaning that I cannot poke holes in a lot of the things he says. And I'm a critical person. I will definitely try to poke some holes. So either way, it's pretty valuable stuff. I'd recommend going over there to Gold, Ghosts, and Guns, checking his stuff out. It's 2 times a week. Somebody corrected me on here, semi-weekly, not bi-weekly. Someone back in the comments, I said bi-weekly, but that means every 2 weeks. So he's on there. Also, don't forget the free algo that we give away. Go into the description. There's a link in there. Give us give us your email, real name, fake name. We don't care. And we'll send you that algo for free. Thank you all for watching. We'll be back next week. Velas is on next week too, and we might even have it sooner than Friday. And we're probably going to start doing some shows pre-recorded, by the way. So know that we might have either a change in schedule or not, but the shows, some of them may no longer be live because we just have a lot of schedules to accommodate, and we have a few other things that we're doing around Rogue. We're going to see some changes, expansion mostly. We're just going to be doing more things. That's the biggest change. So thank you all for watching, and we will see you next week. Enjoy your weekends, everybody, and reach out to me if you have any questions over on the Discord. Peace.